market and this. Yeah.
Yeah, no, we can bring it up. Oh, welcome. You just entered the trading pit, your home for sophisticated takes on the crypto markets. It's April 4th, a new month. And here in the studio, JJ and Benjamin of J Labs. I am your host, Marconi White. Man, Bitcoin continues to give heartburn to 20-year-olds as it holds on to the 60K range. But the ETF flows are starting to appear a little weak. Is that sign for caution? I don't know. We're going to unpack that with these two guys. But first, it's rapid fire where I look for simple answers to complex questions. Hope you guys are strapped in and ready to go. All right, Ben and Benjamin, I'm going to start with you. The U.S. government Silk Road assets, should they sell or HODL?
They have sold it already.
Oh, okay. Well, that's news. That's front print. Okay, so should they have sold or should they have HODLed?
Nobody should have sold any Bitcoin.
Okay, all right. There's the opinion I'm looking for. There's the rapid fire. All right, JJ, meme coins, are they perpetual lottery tickets, true or false? True. All right, there you heard it from JJ, the man who I think has put half of his allocation into meme coins, probably Bowden. All right, no, we'll talk about that later. All right, Benjamin, Q1 net inflows for ETFs, I think there were about 15 billion, if I have that right. Will Q2 be higher or lower for the ETFs? Lower. Oh, guys, you heard that first right here. He's telling you right now, you got to be careful. Definitely get out of those meme coins. All right, JJ, GBTC outflows is selling behind us or more ahead?
Still more ahead. I think things is on a path to zero over time. So as long as they have coin to sell, it's going to go down.
Oh my gosh. I think Barry just had a heart attack listening to this. All right, Barry, let's get you to the hospital. Benjamin, last question. Franklin Templeton investment advisor publishes analysis on Bitcoin ordinals. It looks all fancy. Is this bullish or a top signal?
Ordinals is a bullish signal.
Okay. Well, there's a little bit of gusto. All right. So there you have it. Let's move on to a couple of stories. I feel like this one is already outdated, but we had the story about the government DOJ moves 30K BTC connected to Silk Road seizure. And that was on Blockworks. When I looked at that yesterday or this morning or last night, gosh, I don't even know where it was. They hadn't quite sold it. Benjamin, you had dug up the funds and you were looking at them offline, and it appeared that they had moved but not sold. But you just told me they had sold. Have they sold all 30,000 Bitcoin?
So we work with a lot of OTC providers and credit line markets. Based on the information I could aggregate from all our sources, the transaction to sell has happened before the money moved.
Okay. So they were actually they
finished it, and this was a post-trade settlement.
So how much pressure?
Also, probably why we were seeing a huge dump, or the correction we were seeing from 70K, coupled with what was happening on the stock market and DXY moving up strongly, and 30,000 Bitcoins being sold. All of it coupled together. So we might be having this uptrend move as a result of an exhaustion in selling pressure as well.
Okay. What's your perspective on 30,000 Bitcoin coming into the market like that? I mean, I think back to what we had in the last cycle about some of these larger movements that happened from Luna, that happened from Celsius. 30,000 is a significant number, but then you look at sort of the volume from an ETF that we saw in Q1, and I think it was over $1 billion. Or I guess it would be about 2 billion, right? Roughly, that they were putting into the market. It feels as though it absorbed rather well. What's your perspective on the market shock from having 70K or 30,000 Bitcoin sold into the market?
So last year, around February to March, US government sold 30,000 Bitcoins. So at that point, what happened is they moved it to same Coinbase, same modus operandi, everything. We saw a price correction before the transaction happened, and it was a post-trade settlement after that as well. And since then on, price actually went on an uptrend to give a very good returns, when it comes to the price action. And we saw how the rest of the year panned out. compared to last year, I think now the demand in OTC for Bitcoin is quite high. There is consistent demand compared to oscillating demand last year when we talk to our OTC brokers and get more information. So there is lesser requirement to actually sell it on the order flow than to sell it peer to peer. So I think this entire transaction was more peer to peer. It is possible some of the hedge funds combined together and they are trying to front run future RIAs who are basically going to come in and allocate into ETFs. So these OTC brokers and hedge funds, they probably combine forces and absorb this rather than letting it come into the market and flood it out.
That's interesting what you just said. It feels like there's more depth in the OTC market. So we can continue to see some of these transactions happen without having a huge impact on pricing. As you said, they're front running. We're going to talk actually about this next trade, which may be part of why the hedge funds and larger institutional players are fine with it taking and absorbing some of that sell. So JJ, I want to bring you up here because we're talking about narratives because there was Silk Road Bitcoin coming on the market. That was a lot of clickbait, I want to say, and a lot of people were seizing on that on Twitter or X. It's all about narratives. The latest one I saw came from CoinDesk. The article headline said, hedge funds hold record bearish bets. Data shows. Goes on to say the net short positions on the CME Bitcoin future contracts is 16,102, the most since 2017. Most funds have taken short positions as part of a carry trade, one observer said. JJ, is this just clickbait or is this something that people, investors, and traders need to be concerned with?
Yeah, it's a good headline, right? So it gets people thinking that you could get a massive short squeeze, and not say that there isn't some speculative short interest baked in on that, but if you look at the CME alone, it's about 13% currently, annualized basis, which means if you're longing spot, shorting the CME futures over the course of a year, you get 13% interest, which you'll receive on investment, which obviously outpaces anything you get on treasury yields or bonds or things like that. So it's an attractive trade just for that purpose, and it's just delta neutral. So whether price goes up or down, they're just banking on this trade. They're not exposed to price in either direction. It's just it's a bullish impetus for spot flows because obviously what they're doing is buying spot and then shorting the futures, but it's easy to misread that and think that there's some huge speculative bet going on against Bitcoin right now, which isn't the case in mass.
How much? Okay, so you have the carry trade, which is mentioned in the article, of course, buried in the article. How much of this is your perspective that this is hedging for some of the operations that have to happen from an ETF perspective?
Yeah, there's a lot of that going on too. It's kind of a mixed bag, right? So they're just taking the cumulative total of all short interest and saying, hey, here's what it is. Probably, I would say 75 to 80% of that is owed to the carry trade. Then you have some speculative interest, and then obviously hedging as well going on in there of just people, when Bitcoin's below the all-time high, they don't want to hedge. When it's above all-time highs, they'll probably cut those hedges. So it's just a mixed bag of people that don't want to totally take off their Bitcoin exposure yet. So what do? You just get a hedge. You short it against in perpetuals, you hold the spot, and this way you're covered until you have some clarity on the market.
Well, there you have it, guys. Stop reading the articles at all. Just come to our show Tuesday and Thursday. We'll filter through what matters so that you can actually stop worrying about clickbait. All right, I want to break down the market because we had a very bearish show on Tuesday, and I feel like things have kind of reset just a bit. Before we do, I want to say welcome to Light Signature KS, Adrian, VR, Dev. That's an interesting first name. David, Sean, I can't even pronounce the next one. Hero, Sean, Paul, Sean, JB, welcome. So glad to have you here. Smash that like button, the thumbs up, and share this obviously with your mother, your brother, your little sister, whoever is looking for some avatar takes on the crypto market. But let's get into the actual information. So I looked at the data before we opened the show. Bitcoin was sitting around 66K, Ethereum at 33. I'm adding Sol to the mix at 186. And if I look at the last 7 days, Bitcoin's down 5%, ETH down 6%. Sol's actually up 1%, a little sneaker. But if I look at the ETFs, if I look at warning signs, the ETFs since April are at 68 million, which is low, right? Which is just low. And we had April 1st was a net outflow day with GBTC leading the charge. JJ, what are you looking at that's telling you? We were talking offline before the show. You said, hey, I think we had this bearish show, but now I'm starting to think maybe this is actually more bullish than I expected. What's your take and read on this market and where we are right now? Looking again with the backdrop, the ETFs being what they are, and then being a catalyst for Q1, and now looking into Q2, where we were just talking about how people need to have cash.
I think we've seen a lot of speculative interest washed out basically over the past 2-3 weeks since Bitcoin made that all-time high. And like we were talking about on Tuesday, obviously we started the show very bearish. Then throughout the course of the day, as I started to look into the data and whatnot, we saw obviously this was going down on declining volume. It made a higher low. And we had that news catalyst event. So it seemed like the market was waiting for something. Finally, the headline hit, hey, the government moved some Bitcoin or whatever it was. It was basically a non-event that the market was panicking over. But you had shorts piling in at the lows on low volume. And I sent out a tweet on Tuesday just showing the order books, showing that there were some bids stacking up below the current price. We had a lot of short interest coming in. And usually this is just your perfect setup for a mean reversion squeeze, which we're kind of seeing play out now above 67.3 in pre-market. So that's up a nice, 5% from the lows on Tuesday. And we're seeing some of that short interest squeezed out, and we'll have to see where it goes. But if you look at funding rates, like just look how massively these have come down in recent weeks, basically since we lost 70K on April 1st, the funding's just gone flat, essentially. It's just been a total wipeout of speculative buyers and whatnot, which is what you want to see for continuation higher. So we'll have to see how the end of this week plays out, but it's looking pretty good right now.
Yeah, so maybe unpack that a little bit more. I mean, when I looked at the numbers this morning for perpetuals, the open interest is still you were talking about some of the leverage being washed out. It's still sitting at about 18 billion. We've had a show where it's been half that. Now that's just in the last 24 hours, that's up about 2%. If I look at liquidations, it's 47 million, not massive, and a good, I would say 60% of that is roughly on longs. So now it still looks like the perpetuals are positioned more longs than shorts. How do you kind of square that?
Let me pull up the liquidations, because we did see a lot of liquidations come in earlier this week on that wipe down. So basically that move from 67 to 65 took out about 36 million, 37 million in a single candle of long open interest, which was a good wipe. And then you just see how the funding rates went flat. And I think a lot of the new open interest that's been coming in is owed to shorts, the cash and carry trade, et cetera. It's not the same speculative interest that was driving it up as we went across 70K last week. Like you see how massive these funding rates are. That's more indicative of a speculative froth. And to see that washed out and now price recovering, it's a very favorable setup for continuation.
Well, and I'm looking at the basis trade and the annualized basis for these trades. If I go to the very top one, 66% on Huobi, 28% on Kraken. And we were talking earlier about hedge funds looking for some of that juice right now. I mean,
you have to sort it by OI. So if there's not a whole lot of volume there, if there's not a lot of volume and open interest, then you'll kind of get some misguided basis trades just because there's not a whole lot of people in positioning, like evening out that misbalance. But yeah, you could theoretically capture that. If you look at the highest basis, let's see. So like the Binance September futures is an easy one. Could long spot, short Binance September futures, and that's 26% annualized. So there's a lot of juicy basis trades going on here for sure. And we wrote an options article last week just showing out some of the premiums for the money contracts in April. That's another way to capture that basis is you hold the spot, you write call contracts against it, deep out of the money, and you're fully covered if price goes up. So I think there's a lot of that going on as well, which is just favorable because ultimately what that leads to is people buying spot and then selling derivatives against it, which is what you want to see for a healthy market.
Well, there you go. Healthy market, because we're all about our health, hitting up the doctor. Benjamin, I want to ask you a question because you have more of the inside knowledge into how the institutional players, market makers are looking at this. What's your perspective when you look at the basis trade? You look at and you think about volatility and more of these traders coming in. How do they look at the volatility that we've seen in recent weeks? Are they upset that it's starting to flatline a little bit, that we're kind of ranging between 60 and 70? Are they happy to see it maturing, maybe having a little bit of volatility? We've talked several times in this show about how we're expecting volatility and it hasn't hit. What are they anticipating, and what are they actually looking for? What do they want?
No, they do like a ranging market because they can milk it much longer before an actual expansion into a 2x or a 3x level of a market push happens on Bitcoin. So everybody loves it ranging, and they just want more degenerates to keep speculating on the perps so that they can capture the funding and have keep on going on the basis trade, because it's easy money. Right now you can borrow funds at 5 to 6% and deploy it, and if you can capture 40% as annualized APY using the basis trades, that's fantastic. Even if you're able to do 25%, that's amazing, right?
Yeah,
I mean, it's
absolutely.
25%. Let's remove the 6% that you pay for your interest for taking up the loan. That's free money in your hands. So a lot of funds are basically deploying into that. But yeah, this needs to be in large sizes. Only then you can have an efficient entry and exit, because the cost of execution matters, because of the fees and all that. That's why large volume traders actually benefit out of the basis trade rather than $10 traders who are trying to make money out of the funding. And they love it if it can stay between 50 and 85. That's basically what I'm hearing from multiple directions, that it would be good if the price basically stays between 50 and 85 for a few months. So
No, so you're hearing that from market makers. You're hearing that from institutions that are looking at wanting to milk this trade for a longer period of time. Is that correct?
Yeah.
Okay. JJ, I want to hear your perspective. You hear that. I know you talk a lot about trying to play against the market, looking at the options and trying to play against the market makers there. What's your perspective on them being able to pin in this range for a longer period of time?
So if we look at the term structure chart here, this shows us what the implied volatility levels have been since March 11th, which was when Bitcoin made the all-time high, somewhere around that range. So we see the implied volatility reach like an insane level, 100, right? And then obviously it faded down. But when it was at this level, it was just so profitable to sell options or short derivatives against it, because the premiums, the funding you could collect, and also options premiums for selling those derivatives were so juicy. So if you were holding spot Bitcoin, there was just a free trade that was staring you in the face right there. So we've seen that sucked out a lot in recent weeks, and we've been covering this in our newsletter on just how much options premiums been burned. Basically, anybody that's been speculating in either direction just keeps getting chopped up. And how long this will last, I don't know. It seems like price makes an expansion, right? So if we start to see Bitcoin trend above 74K again, I think we'll see this volatility. This is the Bitcoin implied volatility index. I think you'll see this make a run to new highs. And also to the downside, if Bitcoin loses the 60K level in the weeks come, I think you'll also see this spike pretty strongly. So I feel like there's been a long enough compression period here in volatility to where we're probably due for a spike in the next week or two. So we'll see. But I mean, the long term, like they want to keep it pinned. And what was the range Benjamin said? 85 to 60.
Yeah, I heard 50 to 80.
Yeah, I think that's very doable. Like you can sell spot if you have enough of it and kind of control the price. 80's not too far of a like that gives you a lot of leeway, a lot of room for error there if that's your targets. I think that's an upper bound. But I think if we do get above that level again, you'll have that opportunity to sell juicy premiums again, the same way you did in March.
So I want to summarize this here because it's an interesting story. We just saw this deleveraging moment. We didn't see a lot of spots. So, people aren't necessarily willing to let go of their spot even on these sell-off moments. We just saw hedge funds absorb through the OTC 30,000 Bitcoin that came from the government from Silk Road. And Benjamin's saying that we're seeing a significant amount of depth on the OTC market. So it's able to absorb that kind of volume. We also had
been a lot of absorption, right? You think in the recent weeks, just how much selling has taken place. Like you can even see it in the volume candle here, right? So as soon as we went above 70, there was just a whole lot of selling. And the fact that we barely lost did we even lose 60K? We didn't.
No, we haven't.
So yeah, it's impressive.
I'm worried that I need a tattoo right now that says up only. I don't want to give that to Kobe, but it feels as though if I look at all the catalysts right now, there's no one that wants to sell. The market looks for opportunities, even going back to 50,000, right? If that's where the market is able to place those basis trades, and some of the largest institutions are doing that, all that would suggest that we're here. We have a fairly wide range, which would be okay for volatility, that would allow them to make some good money during this time. And we're also not seeing a sell-off. I mean, what is there to be bearish about right now?
Yeah, I pointed out this a couple nights ago on Twitter. It's very similar to when we broke above all-time highs in late 2020, early 2021. We had that washout candle, but we didn't really lose any critical levels. Like, it looked ugly for a couple days there, went down, retested the 50-day moving average, but barely lost 30K, and then it was straight back up. I think we might be gearing for another run like that. I don't know if we're going to do a double, but certainly 80K could become a target here in the next month or so.
Okay, well, you heard it here first. If you're bearish, maybe it's time to see a psychologist. Okay, I want to break down two more things. Then I want to be talking a little bit about positioning, as we always do. But first, we got to talk about those outside forces. Aman has a question, which is about positioning, so we're going to get to that. But it's about the BTC miners. He says, haven't really gone up all year, of course, with having being bad for the profits. How do you see the upside there, Benjamin? I'm going to ask you to cover that a little bit later in the show when we talk about positioning. But first, again, we're going to have to talk about the Dixie. We're going to talk about some of these unemployment numbers and what that could mean. But before we do that, I want to say welcome to everybody. Thanks for being here bright and early on this Thursday morning. Definitely show up every Tuesday, Thursday if you want to hear this breakdown of the market. And we're going to be talking about options and positioning and options. If you're interested in doing that, definitely check out the link in the description to CoinCall. CoinCall is a great exchange where you can trade perps, options, and spot of all the majors. I'm showing it right now on the screen, and it's exactly the video or the example that's being used for all of the options video that JJ have. If you're interested in getting prepared so you can make these trades later on in the year where they're going to be so juicy, now is the time to sign up, start doing your paper trades and small dollar trades so you're prepared for those actions. Again, that is CoinCall, the elegant interface and the competitive fees. All right, JJ, I want to kick it off to you. You know, we were talking on Tuesday about the three horsemen of the apocalypse, and one of those obviously was the Dixie going up. We had oil going up, and I just looked this morning. It's up at $85. It looks like it's forecasted to be up another, I don't know, I want to say $10 in the next year. What's your perspective? We just talked about all the reasons from a crypto perspective not to be bearish, but from an outside forces perspective, the risk still exists. How big is that risk?
Yeah, it's always omnipresent, right? So we had a rejection from the top of the Bollinger Band on both the daily and the weekly chart for DXY. So kind of, you don't expect it to break above that on the first try. It's coming back down now. We see it retesting 50 RSI daily or 50 RSI on the weekly as well as the daily. It's coming back down to retest its 50, 200-day moving average are all kind of in the same 103.80 range. And I think it will bounce from here. It's just a matter of how high does it bounce. Is it kind of a dead cat bounce that loses steam, or is that going to be the bounce that sends it into a parabolic set of new highs? Based on the data that we saw this week, I think it was past couple days of really harsh job numbers that came out. So it seems like that's kind of what the Fed was waiting for, to reinforce their narrative that they should be cutting this year. The market seems to agree with that. So we'll have to see if the market reads that as bullish, and if that could ultimately lead to Dixie losing all of the momentum it's built up over the past few weeks and reversing to the lower end of this range, hopefully eventually back to 100. But it's definitely, I mean, there's no doubt about it. It's gotten extremely weak over the course of the past couple of days, just as we were getting nervous there on Tuesday. Mm-hmm. It seems like that's what the market wants you to do, right? It forces you to entertain the most bearish scenarios at the peak moment, and then it reverses on you. So we'll have to see how it plays out. I think this is going to be a critical test of support here. It's almost certainly going to bounce, but it's a matter of how high that bounce goes. Does it just kind of come back to the middle, or does it reignite it to new highs? So that's what I'll be keeping an eye on.
We've got the halving happening in just over 2 weeks. What's your perspective on looking at that Dixie and trying to take it out for the next month or so? Oftentimes you're talking about month-end closes, weekend closes. Is there anything, from a catalyst perspective that you're looking at to really that would drive that in one way or the other, really, going into the halving and perhaps even right after the halving?
I think the halving could sync up with the same around time that Dixie loses these support lines, the 50, 200-day moving averages. That would obviously be bullish. I think overall, Dixie's obviously in a downtrend. You kind of look at it's just been chopping back and forth, but making a series of lower highs. So hopefully that kind of peak fear moment that we had on Tuesday was it, and that we can get a reversal back to 100 later this year, which would be the green light we need for a raging bull market this year.
Yeah. Okay. Well, and we don't usually cover oil. So I did mention that, but we're not going to go into that analysis. And our favorite rates man isn't here. I know he wants to talk rates. He's probably screaming to get on the show. We're not going to let Ben Lilly do that right now. But I do want to ask, I want to bring up a question, which I think is a good one. So from an outside forces perspective, One Horseman looks like it could be weak and maybe he's going to fall off. But
you need all three for that to be a potent signal.
That's right. We need all three. They all need to be riding at the same pace, at the same time, on some stallions coming in to destroy things. Benjamin, I want to ask you a question from JB. Any opinion on the ETF flows turning positive again? So I think I ran the numbers. We had about 68 million thus far this week. You mentioned at the start of this, I asked you the question, are they going to be higher or lower in Q2? What's your perspective there on ETF flows? Realistically, are they going to slow down? How much are they going to slow down? And is that just an anticipation for them to ramp up in Q3, Q4 of this year?
I think we probably see half of it in this quarter. If we see half of it, then I think it's still pretty good, because I think Q1 was pretty much all of FOMO, and it was cheaper to buy it compared to the prices now, right? And with halving happening and with Q3 slowdown periods typically that comes in, there's the seasonality that's attached to BTC. Once the halving is done for a couple of months, it basically goes on a sideways accumulation, right? So it is possible some of these funds will start planning to bring in cash depending on how the market is positioning itself, rather than just, getting in nonstop and try to beat the volume that they brought in the last quarter. Nevertheless, end of the year, I think we'll still have much more volume than we started with in Q1. And I think if Q1 did 15 billion, there should be at least one quarter this year which basically does 50% more than what Q1 did. This is what I think will happen this year.
Well, I want to come in here because there's so much of this feels like it's about narrative and not about strict data or signal that we can look at. And I was listening yesterday to a conversation with the head of revenue from Falcon X, which is a market maker, and he was talking about the question was posed to him: how much of this money is coming in from institution? How much of this is coming from retail? Right, that now has exposure through these ETFs. They can do it in various vehicles that they didn't have access to before. And he said, it's difficult to say. He's seeing interest from an institution perspective, but I think his point was that most of this has really been retail driven. But it's hard to say, right? There's no direct signal that he can look at. So when you're adding some of your perspective here, saying you expect these numbers to go up, is this really being telegraphed based on, let's say, gold or something else? Is it more of a gut intuition? Is there other signals that you're looking at? How do you break that down?
One thing is, of course, what is happening with gold. That's very bullish. And Bitcoin is still treated as a digital gold, last time I checked. And that's how people perceive it either way. And it is halving. We have the halving that's going to happen in a few days. And once that's done, the seasonality assumption that retail has will come into picture, that it's a regular 4-year cycle, rate cuts are coming in. All the macro narratives we already have are going to come into play post halving. We have the elections and we have new changes that will happen in the economics. So many things. Worldwide, there are many countries which are undergoing elections as well. So there's a lot of spending. One way or other, there is flow coming in, whether the OTC providers want to declare it as retail or not. The problem is, like, a lot of these is coming in smaller sizes. It could be that they're just buying in those ETFs in those sizes compared to the previous years where algorithmic participation into purchasing ETFs was much lesser. But with respect to Bitcoin ETF, we have seen that there's a lot of algorithmic purchasing that also happens, with which even Bloomberg's Eric was pointing out to with fidelity, that there was a lot of algorithmic volume coming into the picture. So this is not normal typically. If you take any of the ETFs in the past years, you do not see that much of algorithmic volume come in. So what do I mean by algorithmic volume? Is basically equal size trades constantly going in at a certain interval, T-wapping in. That is not a typical behavior we see in ETFs. And this is something new that we are seeing with Bitcoin ETFs. Or it's not us who's seeing it new. It's a lot of these Bloomberg analysts who think it's a bit uncanny, for that to be happening, which is why everybody is a little unsure whether the demand is primarily coming from hedge funds, or is it coming from retail, or is it coming from someone else. But I think it's a mix of a lot of things. I do strongly believe it's a lot of hedge funds who are also trying to front run this and start purchasing before some other institutions start coming in and purchasing, because there is a lending market for Bitcoin. And when the prices go up, the overnight rates for lending Bitcoin to others who want to buy and hold it in their portfolio, those rates go up. In January, it went up. I think not in January. In February, the rates went up as high as 15% overnight. So a lot of that
15% annualized overnight. Wow, that's incredible.
Yeah, that's what it costed, because there was not enough, access to BTC. This is, I think, around 28th or 29th of February, this was happening when we were seeing huge price rise all over the board. So those type of opportunities still exist, which is very attractive for hedge funds and a few high net worth speculators. So it's a very different game that Bitcoin is getting into, and it's going to be interesting. Nevertheless, it's a very positive outlook. You don't see so much of volume coming into the market just to die away. This is not DeFi 1.0. This is not Turn Finance or those type of tokens. It's Bitcoin. Right?
Okay.
It has a very strong behavior and a strong use case.
So it's I think, to sum up what you just said, there isn't a specific signal that we can point to that says these are the buyers, but we're seeing behavior through what you're saying about the TWAP, where you're seeing about the algorithmic buying, that suggests that it's I would say a broad set of buyers. And there's many reasons that institutions are getting into this, just from as you just said, from a loan perspective, from a basis trade perspective, there's reasons that they're accumulating this, and that could continue to have a positive impact on price. Again, all this stays bullish. So, okay, I want everyone to be thinking about that. When you're on Twitter and you see some sell-off and everyone starts to get negative, realize that the overall signals remain very strong. Obviously, we want to continue to see these ETF flows stay at least positive. As you said, maybe we're going to see half that for Q2, but that doesn't mean we're actually going down. And certainly if we don't see spot selling, that's going to stay positive. So I want to move into what everyone's asking about, which is around positioning. Everyone wants to be asking themselves, do I need to be getting in right now? Should I be looking at this later? I asked a question on Twitter about tokens that maybe people are looking at. Maybe it's time to be scaling in as we have some of these pullbacks. So I'll be asking you, Benjamin, a little bit about that. But JJ, I want to start with you. When you're looking at the options market, we oftentimes talk about, these rotation sides, about the momentum moving in the options, and you want to wait until the market has settled down for those rates to kind of reset so you can get a better price, a discount price. So what are you seeing right now from an options point of view for just a trade that maybe someone that's looking relatively attractive?
Yeah, so there's, like you said, anytime that we have these pullbacks in bull markets, those are typically your opportunities for buying, especially like where we're at now on Bitcoin. We're at the 50 RSI mark on the daily. That's typically your part in your line to stand in the bull market, right? Where Bitcoin will typically tend to trend above that in a bull market. And same way we saw overheated RSIs, as it made new all-time highs, it'll get back to that level And when it does, that's when you can expect to see this kind of really insane volatility levels like we saw in March. And if you look at the implied volatility term structure, it's not priced like that. So if you look at this and you say, well, I think Bitcoin could get back to new all-time highs and overextend these RSIs once again, and then you pair that up with something like this IV chart, and you see that the implied volatility term structure isn't signaling that, that's kind of your that's your alpha, right? So if you want to take advantage of it, like if you have a lot of spot Bitcoin that you're managing, it obviously makes sense to sell options against and stuff. But if you're just a small discretionary trader, you're trying to earn a buck, you can take advantage of those kind of setups and say, okay, well, here's my risk reward. Here's where I would cut it at if Bitcoin starts to lose momentum. Otherwise, I'm going to try and ride this thing up and see if I can capture some of that upside volatility. So what Benjamin and I were discussing last night into this morning was buying up some out of the money June calls, and they've actually gotten much more expensive on this leg up. So take that for what it's worth. But I think these are around $7,000 not too long ago, these $70,000 calls. But you could even go up to 80 if you think Bitcoin's going to eclipse all-time highs over the course of the next month. You have a lot of time to expiration on these. So again, like obviously these are extremely high premiums, but that's what you have to pay in a bull market. It comes with a lot more risk. So be aware of that, but also know that, hey, if Bitcoin does get traction above 80K, say in the next month, these 80,000 calls might be going for 20. So you could quickly 3x your money on something like that and then sell volatility against it and kind of even yourself out as price goes up. You find some more opportunities. It's kind of a standing post that you can take position on and then play around it over the coming months. So I think June calls are a good option here just because we're still 10% removed from all-time highs. I think that there's a decent chance, especially if this DXY slide continues, the halving narrative picks up, there's opportunities there for this to get a lot more expansive. And like we were pointing out, there's been a lot of volatility buyers that were washed out of positions in recent weeks. And typically that's kind of a good time to buy after in a raging bull market or trending bull market. You know, you want to find times to buy in that are more favorable than they were in March. And it seems like we're there now. So I think that's a good opportunity.
Okay, I want to ask one question, and then Benjamin, just you're on deck here because we've had some questions about BTC miners. So I'm going to ask you that question in a minute. JJ, I want to talk about the scenario where we're range bound, right? So we've been talking one scenario that we start to see a breakout in volatility as we start to move towards the halving. That's certainly a possibility. And if you were buying $80,000 calls, right, and we get that spike in volatility, you can make a profit there. There's the other scenario, right, where we continue to see range bound, right? When we were talking, Benjamin was giving sort of that range, the market makers and institutions are happy with the 50 all the way to 80K. In that scenario, let's say we stay range bound from 60 to 70 over the next couple of weeks. What would you suggest, or is another way to play that same trade is to buy further out the date call to add a little bit of hedge protection?
Yeah, so you could play that, like say you want to buy those June calls because you think we could expand in May, but you're not so sure about April. What you could do is sell these shorter dated calls against it. So you say, okay, I don't think we're going to eclipse 70K by the monthly close in April. You could sell this 70K call against your 70K June call or 80K June call and collect this $3,600 of premium there. Then if this expires worthless, it essentially lowers your cost basis on the June call.
Mm-hmm.
So you get that additional optionality for another couple of months at a lower cost basis. And that's one way to play it. Obviously, it takes away your upside. So if you're selling this on a 1-to-1 ratio, Bitcoin goes up to 100K, you only make the increase in volatility on the June calls because these are offsetting. But it's all about risk profile and management there, right? So if you're super risk taker and you say, hey, I think volatility is going to expand, I'm going to buy some June calls and that's it. But if you wanted to play it a little bit safer, you could sell some premiums on, say, the April or expiry if you wanted to protect yourself a bit more. But be aware that does take away your upside potential as well.
Right. So really understanding how to play that risk reward. So if you think we're looking at that volatility, you're expecting that volatility to happen, you can maybe run naked, right, with buying some of those calls. Mm-hmm. If you think we're in fact going to be sitting here with more range bound, you can cap that with another call that gives you a little bit more of that risk management. So two different ways of looking at the market and kind of sizing it up and figuring out what's right for your portfolio. If you are interested in actually placing those trades, definitely check out the link in the description. Go to CoinCall, set up an account, and start looking at the options chain. And you can also follow along with JJ's videos. He's got a whole set out here on the channel, and he's going to be putting out a new one. I've already seen it. It's definitely on fire, but go check that out. Go set up your account so you can start trading those options on coincall.com. All right.
We should point out ETH too, because these options premiums have been beaten down too. And if you think, like, you look at Bitcoin's technicals and ETH are basically worse, but it's below.
So you want to sell the audience on a worse product? Is that what you're doing, JJ?
No,
Did I hear that right?
I think there's more upside because the market hates
okay,
it.
all right. Sell me.
Anytime something is as hated as ETH is right now, you don't see a whole lot of upside priced into it. And if you think, ETH could go to $10,000 by the end of the year, if you have some extreme bull market targets, buying something like a $4,000 call for 900, I don't think that's a bad idea if you think it's going to get above all-time highs. I think there's a lot of options. We always say that for
way to put that pun in there. That's the comedian coming out. Okay,
opportunities in the ETH options chain.
I want you to be honest with me. Is Ethereum right now the most hated trade in crypto?
Yeah, people hate it.
That's usually a bullish sign that it's time to get in, is it not?
Not, like I said, we want to see the capitulation on the ETH BTC pair, but I just think there are people stuck in it that rotated to ETH and thought it was going to outperform forever, and now they're questioning everything they've ever believed in. And until we see them puke up those positions, that'll be the ultimate bottom signal. But in terms of USD price, I think ETH is nearing a bottom. Maybe it goes below 3,300, but I think it has way more upside potential than down from here.
All right, so play it out for the audience here. You wait to see that volume profile on spot, and then you're going and looking at the December or 9 months to a year out options for Ethereum and buying calls.
I think against USD, I think ETH looks pretty good from a risk reward perspective here in terms of options. If you want to go out to June through December, obviously they're pricey, but like I said, we're in a bull market, so you have to pay a little bit more for these premiums, and you have a pretty tight risk reward. So especially if you're buying something as far out as June through December, if you see ETH go below 3,300, you obviously take a loss, but it's not going to be massive because there's still a lot of time component baked into these premiums. So I think it's worth the risk to buy some of these out of the money calls on any of those dates. But versus the BTC pair in particularly, what I want to see is that ultimately that volume puke on this, where people give up. Maybe Bitcoin goes to 80K and ETH's still below 4K. We see this ratio drop down further, and then maybe we'll see some capitulation there, and that'll kind of signal that, say, it's time to move into ETH once the ETHs give up.
Okay, once they're willing to give up the cookies. All right. So there you have it. You've got two different ways you can play this from an options perspective. I'm glad JJ brought in Ethereum. We haven't talked about it as much, but definitely when it's the most hated trade, maybe the most brilliant trade you can make for the year. All right, Benjamin, let's move on. Let's talk about BTC miners. Again, I want to ask the question. It came from Aman. Good morning. Good morning. Any thoughts on BTC miners? They haven't really gone anywhere in 2024. Is this a good time to be looking at them, especially as we go into halving? And we know that some of them are definitely going to be hurting after the halving. Other ones are well positioned for Bitcoin sitting at its current prices. So what's your perspective there, Benjamin, looking at either spot or options for the miners?
To be honest, I think almost all the crypto stocks, all the miner stocks, they've taken a good beating over the past few weeks. And there's always this misconception that miners are not well positioned, that they may be dumb, that halving is going to hurt their business. And we keep hearing this every cycle. Like this is I think it's my third halving. We keep hearing that every halving cycle, but it's not the case. They have a lot more instruments than retail and high net worth individuals when it comes to hedging their exposure, when it comes to paying the bills. I think they're well positioned. I don't think they take huge hits. And I think they will do well after the halving as well.
Okay.
A lot of that, there's a lot of short interest baked into these two, which will
Correct.
when the halving comes and goes without any kind of catalyst to it that sees miners shut down. Like they lived through the 2022 bear market, and a lot of these stocks have survived. And I think you look at miners historically, like look at this chart, you just see that their gains come rather quickly. So there's a whole lot of consolidation periods like we're seeing now, and then rapidly they shoot up, 50% in a single day. If you look at kind of like Mara, like it's right on this 50 RSI mark on the weekly chart. That's usually a good spot for one of these major bounces, and I think it's coming. over the course of the next month or two, especially if Bitcoin breaks up, makes new all-time highs. I think you'll see these things surpass their levels from earlier this year. I
So,
think you'll see a lot of shorts close, and they'll kind of go into a week or two period of parabolic.
all right. So JJ, play that out. We always talk about crypto options. Let's talk about Mara. Is it buying spot? That's obviously one play. It's just about buy spot Mara. A different play would be an options standpoint. I don't know that we have data that we can pull up per se, but how do you think a trade like that would look like? Would you buy the spot and sell calls against it? Would you just go ahead and buy calls? Would you buy calls and then put some kind of hedge on it? How would you think about that trade if someone was asking you to look at that?
I personally like the options here just because they've been so compressed that they're not really priced in. Like if you look at the Bitcoin options, how we were discussing that they're so expensive. And when these miners go up a lot, their calls become expensive. But right now they're cheap because they've been in this kind of downward chop period. So there's not a whole lot of upside priced into them. So if you thought Mara could get to $30 by the end of May, let me just look up that real quick and see how much that would cost you. That's probably only less than $1 probably. So if I look at May 3rd, $30 calls on Mara, those are going for 69 cents. And if you think Mara could possibly double within the next month, those could be worth over $1,000 a piece. I think that's probably a pretty good play. And they're just cheaper. So it's a good way to get basically leverage Bitcoin exposure. If you think of it that way, and that if Bitcoin makes a 10 to 20% move, you could see these miners go up 50% to 100%, and you can capture a lot of that upside with options. And the optionality is cheap now because Wall Street hates the miners.
Yeah, they always hate the miners. Do you think there's any perspective on going down the various risk curve on the miners? So you've got Mara and Ride, I think, are the more established ones. You've got is it CLK maybe and TeraWolf that are some of the smaller outfits. Do you stick to the larger outfits that are a little bit more established, that probably have more depth around their stock, and maybe have more short interest, which gives them higher squeeze potential? Or do you look at some of the other ones just because they're cheaper?
So we sent out this chart to our Oculus subscribers yesterday, and it's just kind of a breakdown of the average cost to mine for miners. So if you're looking at them, you should be looking at what price they'll need post-halving. Some of these are really well positioned, like CLSK. Their average cost to mine a Bitcoin post-halving is around 45,000. I think Wolf has a pretty good price too, 59,000. Mara, that's obviously a mega corporation, a lot of institutional interest in that, so they want to see the stock do well. And you want to find those ones that obviously you're in a good ownership pot, and then also they have a good their position to outperform in case of a Bitcoin reaching 100K plus in 2024.
Yep. Okay.
So I think there's definitely some winners and losers in here. You can kind of look at this chart and make your own assumptions from it, and then just take a look at some of those other data too, like how heavily shorted are they, who else is buying them, like who owns this stock. You can find those institutional interests and whatnot on 13Fs. So there's a lot of diligence to do on them, but I think you will find some ones that outperform Bitcoin in the event that it makes new all-time highs.
Okay, well, last question I had here was from Paul J. Where can you buy those Mara calls? Paul, from a traditional brokerage, at least in the United States, Charles Schwab is one example where you can buy that. I think you can do that perhaps on what's the retail one? Thinkorswim, right? Obviously, and then with the retail one, Robinhood. They may offer those as well. So any brokerage that is offering you options rather than just spot is a place where you can look at the options chain, and you can look at buying some of those options. Okay. All right, Benjamin, I want to have you transition. We just talked about miners. We've talked about options both on BTC and ETH. We just talked about options both at spot as well as actual options for those contracts. Now let's get into the nitty gritty, the dirty little secret of crypto, which is all the altcoin area. You teased everybody with Rollbit 3 weeks ago. Then you rolled it out last week. No pun intended there. Unfortunately, I can't help myself. Now, what's on your radar? What are you looking at that you can start sharing with some people that are perhaps looking at some alt exposure? And we did have a couple of questions from the audience, and I'm not expecting you to answer those today. In fact, I told people we wouldn't be doing that on Twitter, but we had Ondo, MPL, GFI, Pendle, as well as ICP, which I believe is Insane Clown Posse, otherwise known as the Internet Computer. So Benjamin,
coin.
That's what?
The Juggalo coin.
The Juggalo coin. Now, I'll tell you, that would make for a good meme in my mind, but it may be a little bit old at this point. A little a little too old. It's almost going boomer. Benjamin, what are you looking at from a trade perspective that maybe we'll be bringing back next couple of weeks that could get people looking at some opportunities as we're range bound, or even have some buy opportunities if we have a sell off?
So when I spoke about Rollbit, there was a couple of feedbacks that came in later, privately and also in Twitter DMs. Apparently, people were surprised to look into Rollbit as a suggestion, or let's say a coin that I was looking into. But it was an economic play. It was a great PE ratio type of a structure that it has. And it was a no-brainer to think that at one point, this market cap will definitely grow way larger in size because of the underlying market share that the product basically contains. It's a strategical play more on the number side rather than whether it's a bear market product or a bull market product or not. I mean, lottery sales are still the highest in US even this year, So we always have people gambling on, and it has grown from just being a bear market narrative that gambling and speculation happens, but to bull market as well, even though there's a lot of instruments that continues to keep. So with that,
I love your justification. I love the idea that you feel the need to justify it when we're surrounded by degens that are looking for the next 1000x. But yes, please go on. Please go on.
I don't know about the next 1000x, but I'm looking at a few projects, 3 or 4 projects, which have already done TGE and are basically, accumulating, I would say. So what right now I'm doing is more research into not just the fundamentals. The fundamentals are quite clear on those projects, but more on the order flow side of things, on how to pick it up and, trade it better so that in the coming months, it turns out into a potential 10 to 20x opportunity. Mm-hmm. So that's what I'm doing right now with metrics and numbers. Like we have 48 models that we use to evaluate all of these perspectives. So, that's coming, but I'm not going to talk about it today.
Like all my previous girlfriends, you're a tease. Okay. All right. Well, there you have it, folks. He's going to be coming back. So, Benjamin, can we bring you back next Thursday? Maybe you'll roll out one of these for the audience?
Sure. We'll probably tell about one.
We'll tell about one? Yeah. Well, he wants all you guys to come back every Thursday because he wants to see the metrics go up. He wants to have an audience. So definitely, if you're interested in hearing some of the plays, just like Rollbit, I suggest you come back next week. Benjamin will, and the following weeks as well. He'll be walking through the trade. And I think importantly, I joke about this being degen plays. There are absolutely opportunities in this market that people are looking for. And this is where I'm hoping Benjamin can give us a deeper perspective on how to look at a trade. Not just, hey, these are specific coins to look at, but how do you think and structure a trade? JJ just did that from an options perspective. Benjamin's going to be doing that from an altcoin perspective. And that's something you can take to your own portfolio, because at the end of this cycle, what you need to get out of this, obviously, is, everyone wants to be wealthy. That's great. But we want everyone to have some skills, because the skills are what's going to pay the bills as we go into the bear market and you continue on into the next cycle. And with that, guys, we're going to wrap up today's show. As we do, I'm looking at the markets. They're sitting about 67,000 for Bitcoin. Ethereum's at 33,000, and Solana is at 187.
It's charging.
What's that?
67.7 now. Bitcoin's on the moves. Yeah.
Well, thank you for the correction. I'm so glad to be wrong. Oh, that's the wrong music. All right, we're coming up here. All right, JJ, Benjamin, thank you for joining us, and everyone who came out here for the market update. Appreciate it. We love having you here. Definitely be back every Tuesday and Thursday. We're gonna be back next week, and I'm glad that we were able to bring a little bull news to our normal bearish outlook. And I'm gonna say the same thing I say every week. You need to have some dry powder. Keep it ready, because those opportunities are they're gonna be here soon. This is Marconi White signing off.